Good. Hi, Bio. Good to see you.
Hello, Fumi. Good afternoon, everyone.
Good afternoon. It's good to have
Good
you on the
afternoon,
Good
Bayo.
afternoon, Tolu. Tolu, good afternoon.
Yes, please. Good afternoon, Bayo.
Hi, everyone. Good afternoon.
Hi,
Everyone.
Ken.
Yeah.
Good afternoon. Ooh. So it's really fantastic to have you guys here. So I'll go around just because I want you to be here. I've already asked Tolu the question, so Tolu, you don't have to answer that question again. So on a scale of 1 to 10, 10 being how you feel very happy, 10 is very, very happy, and 1 is so. Bayo, how do you feel on a scale of 1 to 10?
Yeah. 8 to 10.
Okay, that's very high. That's good.
Yeah.
You must have slept well. So,
Yes,
Kay,
I do.
yeah. Kay, on a scale of 1 to 10, how do you feel?
I'm good. I'm good.
Good. Okay, so I'll put that like around an 8 then.
Yeah, 7-ish.
Okay, that's good. That's fine. So just a recap of the flow. We'll all have 5 minutes each to speak to our topic or our discussion pointer. After we do that, I will allow any of the panelists to respond or to just add one or few points that might be missing or perspective that we might be missing. From there, I will take questions from guests. So some of the questions will come from the YouTube channel, some of them will come from DMs. Philip would help me with that, so would call my attention to it. And after the Q&A session, we'll move to the next panelist, okay? So I will say we are ready to go. So a big welcome to everyone joining us today. And for those who will still watch the replay, I'll say we've been running on this all year, and it's interesting to see how the economy pretty much has moved through the times. Nothing much has changed. A lot of people probably feel that way. But what's important is we stay on top of the game, we stay active, we stay very involved, and we pay attention to the trend, we pay attention to the data. So today, again, my name is Fumi Okubanjo, and I'll be the moderator for this event. I'm going to go around to my panelists now and allow each of you to introduce yourselves. Okay, so I'm going to start with you, Tolu. Tolu, tell us something about you. Just introduce yourself to the viewers.
Thank you very much, Fumi. I'm happy to be here. My name is Tolu Popola. I'm a finance professional, economist by education, an accountant by training, but by choice, a finance professional. I have done investment management all my career, but I've also worked in the consulting industry. I used to be with ARM Pensions. Then I moved to Deloitte, and from there I moved to managing wealth for a high net worth individual.
Okay.
But also do some consulting for small and medium scale businesses. So I think that's pretty much it. I'm happy to be here. Thank you.
Thank you so much for joining us, Tolu. And I'm sure you're going to give us a lot of insight into the inflationary environment and how to position ourselves properly in these times. So over to you, Kay. So Coyote, I keep saying Kay, but
Thank you for me. K is fine. Good afternoon, everyone. I'm happy to be here. My name is Coyote Olagunju. I'm a business strategy analyst. I've been doing this for about 10 years now. Started in consulting like Tolu. I've also had some experience in the power sector. I currently work in Telecoms. I think that's pretty much it about me. And happy to be part of the panelists today and to have this great conversation. Thank you.
Fantastic. Thank you for joining us, Coyote. And I actually look forward to all the insights you will share from the telco industry with us, because that's one sector most individuals are not looking at closely. We just act more like consumers and hardly put on the investor thinking hat when we consider telcos. So thank you so much, Coyote, for joining us. Bayo, could you please introduce yourself to us?
Yeah. Good afternoon, everybody. Nice to be here today. My name is Bayon Lelawa. I'm a real estate consultant. I call myself a broker before becoming an investor, now a developer, and I run a real estate firm known as One Brick Investment Limited. One Brick Investment Limited is focused more on creating wealth for individuals, for them to live their better life. We are mostly into real estate investment and development. That's what we do.
Okay.
Thank you. Nice to be here today.
Nice to have you too, Bayo. Look forward to diving deeper into real estate and, of course, the fears of doing business in Lagos. Thank you for joining us. Yes. So Tolu, I think we should start this conversation with you. You seem like the right person to put on, into the boxing ring right now and beat hands down when it comes to considering the times we're in. As an analyst, I'm sure you also probably have done a lot of research. And so it'd be good for us to start today's discussion from a data-driven perspective. Okay? So Tolu, talk to us. Inflation, we're going through a lot of pain. You have money, you don't have money, you have to spend, you have to invest. How exactly should we be taking this? Do you want to get us started on that? Awesome.
Thank you very much, Fumi. I have a few minutes, but I'll show you just a few slides just to discuss this inflation question, right? And it's interesting because, in economics, we say, prices are sticky. That's the way we say it. But effectively, what they're trying to say to us is that things always get more expensive, right? And if you look at the charts on the right, you see the first one that goes all the way up. That effectively talks about the average pricing of things that you buy in Nigeria, starting from 2009 up till May this year. So you don't see changing costs, right? But you see it going all the way up. The rate of the movement upward is what you see in the chart below, right? So you see sometimes prices go up aggressively. Sometimes it comes down, it grows slowly. It doesn't come like it grows slowly, effectively. So, that's the inflation problem. And, this on the left-hand side, what you see just shows you the fact that in May 2017, if you hold 1,000 naira and 100 naira, you could buy a loaf of bread, you buy a dozen of eggs, you buy 1/3 of kilogram of beans, you buy pig milk, and you have a very good breakfast, right? Fast forward to August this year, your milk is gone, your beans is gone. You can only afford bread and egg, right? That exactly is the inflation problem. Things have gotten more expensive, and it tends to stay that way. What that means is that if you say, oh, I earn 1,000 naira today, but because of tomorrow, I don't want to spend everything. Chances are that when you want to spend it, when you're ready to spend it, it's not going to be worth as much. That's exactly the problem we're talking about. Now, you say, okay, well, I keep the money, I invest it, for tomorrow, just for my tomorrow is good. But the challenge you have is that if you're not investing rightly, right, you face a risk that your problem won't be solved. You still end up with insufficient funds when you need to consume or when you need to spend that money. So what I have in the chart here is the returns of specific assets or types of investments above inflation rates over some period of time. So if you look at it, the deep blue one, mid deep blue, is equities. So what is it saying to you is that if you take the money and then you go to the Nigerian Stock Exchange, you just tell your stockbroker, just buy all the stocks there for me. Just, I want to invest in stocks so that when I need to spend the money, I'll sell the stocks and then I'll go and buy what I need to buy. You would not have made the very right decision because the value over 30 years, the value of that fund would have reduced. Effectively, you would not be able to afford what you could have bought if you had spent the money, right? And you see that over 10 years period that, maybe if you had bought bonds in 2010, you will still have your money will still be worth more than it was worth at the time. But if you had made all these investments in 2000, right, then you probably won't be able to afford what you should have been able to afford at that time. We see it over 30 years, we see it over 36 years. So really, it's a difficult situation where the rate of price growth is higher than the rate at which assets or investment are delivering returns to you, right? Or they are effectively rewarding you for refusing to spend. They're not rewarding you enough. But that being said, right, I have to say that that's a broad view, but you have to, what this says to you is that that few messages I want people to take out from this. One is that savings is not enough, right? In an inflationary environment, don't just carry your money, keep it in the bank, I will spend it tomorrow. That's not enough, because by the time you need to spend it, it may not be enough to buy what you need to buy. That's the first message. The second message is that when you're making investments, have this framework in mind, that is this return higher than inflation? Will this money be able to afford, will help me able to afford what I could have bought today when I need the money in 1 year, 2 years, 3 years time? That's the second takeaway from this. And the third takeaway is what I go into the realm of what you then do, right? There are investments in all of these asset classes, equities, fixed income, and real estate and everything, or even currency, right? That can reward you. It just depends on which investment do you make. What advice have you received? So it's not just enough to, the way we describe it, to spray and pray. You just spray your money over different investments and you pray that when you need to spend it, the money is there, is enough to buy what you need to buy. So you need to take advice. And that advice is what we'll be discussing in this session, right? There are specific sectors where you should invest in. You'll see some sectors in Nigerian economy, they've done well over the last 10 years, over the last 5 years, over the last 3 years. Some have done well over the last 5 years alone, 5 and 3 years alone. So you'll see the performance of different sectors. And this is structural, there's an underlying structural shift that you're seeing in the economy, and you should invest in line with that trend so that your money does not lose value. To final slides, I'll say that there's a framework for investing in inflation. So this is introductory. I'll just wrap it up with this slide now. Invest in commodities. That is exactly what it is. So what is inflation? The price of goods, right? And every good goes through a cycle. They need raw materials, they process it, and there's an output. If you are the one that you've invested in the raw material, if all the prices go up, it usually starts from raw materials. And so you would have benefited from increase in prices of raw materials if you had invested in that sector. And there are various approaches. And so commodities, agri-commodities, energy commodities, precious metals, gold, for instance, silver, some of those things do very well against inflation when you compare them against inflation. Then when you invest as well, don't just say, okay, I want to invest in this stock. Ask yourself, what sector is the stock in? How's the sector doing? Who are the bigger players that are really milking that sector? I think that's the way to think about it. So that's it, top to down, the summary of the conversation. We'll deep dive and we'll have conversations on each of these slides as we go forward. Thank you, Fumi.
Okay, thank you so much for that, Tolu. So I already have a question. So you might want to go back to the data you shared on inflation vis-a-vis the portfolio, good. So I have a question here. What's the inflation rate benchmark you've used for the analysis? So that's a question coming from YouTube.
Okay. So what we've done is to take, the Nigerian Bureau of Statistics publish inflation data, every month, right? We've taken that data. There's an index, number that serves as the basis for estimating inflation rate. So all of these estimations have been based on that index. I should put a caveat that some of this analysis is not complete because of data limitation. We don't have, for instance, bond returns beyond 10-year period, because when Standard & Poor's started, created the bond index for Nigeria, it started around 2010. So you would not see data that goes all the way back into, into history, right? So there's some data limitation, but this gives you the high-level gist of, okay, where this is a framework. When I'm thinking, I have to think about inflation when I'm making investments. Thanks.
Okay, so I have another follow-up question to the narrative on what inflation looks like now. I know you looked at it in regards to portfolio, but there's also a growing trend in terms of credits to individuals. So we usually call those personal income loans. I don't know if you've paid attention to the volume of credits actually going out to individuals now. I think that's also coming on the strength of the growth in the fintech industry. And it's becoming easier and easier for individuals to actually access loans more than ever before. So if you look at this as an expert in the field, inflation, not a funny situation at all. But then you also have credits increasing at a rate that I don't know if you've paid attention to it, but it just seems like there's so much hype going on around personal income loans. Now, I ask this question because this is a poor country. Most people take those loans to finance basic needs. I just see the screen, and if we're saying inflation is affecting basic needs and people are taking loans to finance basic needs, what do you think the impact of that could later be?
Thank you very much for that question. So, two perspectives, right? Theoretically, actually, it makes sense to borrow when inflation is giving you this scenario, right? Is giving you this kind of behavior, because what you'll be paying back, the effective value of what you'll be paying back is less than, do you understand, what you have borrowed? So if, for instance, I'd borrowed 1,117 naira in 2017, that means that I borrowed one loaf of bread, milk, egg, and beans. But this is 2021 August. I go to the person that I borrowed money from. I give him a loaf of bread. I give him a dozen of egg. I keep, of course, I've enjoyed the beans and the milk, right? So theoretically speaking, it actually makes sense that people would borrow. And it's a natural progression that, so people are using credit, right, to supplement, the weak disposable income, environment that you see, right? And it's a smart decision potentially. The problem is if in a few years' time, right, you need to repay that money, right, and you don't have sufficient income or sufficient assets to pay back that money. So the reasonable thing to do would have been actually to the sophisticated finance professional actually should be borrowing today, right, and investing those funds in assets, right, that gives you returns that you are happy with, so that in 3 years' time, 4 years' time, the value of the money to the bank that borrowed you, that lent you the loan is not as good, and then your assets would have appreciated in value, right? So it would be a win-win, for you in that scenario. It is why people say that, invest in real estate, right? Because, expectedly the valuation grows and, and it goes up and up. So, so that is it. It's you just have to be careful. It's not bad to borrow against, in this environment where inflation is high, especially if your outlook is that prices will keep going up. If you think that prices will come down, don't, then, you'll be paying more in real terms. You'll be paying more back to the bank in real terms. But what you use with the proceeds of borrowing is extremely important, and that is, I think the key important thing that we should take away.
Okay, thank you so much, Tolu. I'm sure we're going to come back to you again, because structuring investment portfolio in the context of inflation is critical, and you might still want to narrow it down, break it down in granular terms. How exactly can an individual do that? But I want us to get into the conversation with telcos, seeing the data you shared around the sectors and the growth there. I know, for example, if you look at your investments in a telco, just looking at the Nigerian Stock Exchange, and you just look at the growth, they're one of the largest, if not the largest, aggregators of consumers right now. And the services we currently get from them are important for any economy to grow or any economy to sustain its growth. So, but at the same time, that industry seems like one part of the puzzle that the average guy on the street might not be paying attention to. And it might also seem that even at a business level, there are opportunities that people are not looking at. So I think this is a good time to have Kayode talk to us about the industry. Telco. Kayode, can you do that for us now? So the telecoms, yeah.
Thank you very much, Fumi. Hi, everyone, once again. Thank you, Tolu, for that very insightful introduction. So when you look at telco industry in Nigeria, from an industry life cycle perspective, it's one that is also quite mature, and I think maybe next to the banking industry, it's one of the most mature, And I think for me, to your point, I don't think people are not mindful. I mean, even if you want to invest as a retail investor in stocks and shares, one of the listed ones, I think the shares come at a very high premium right now. So the narrative around telco is that, it's a bit capital intensive, not a bit actually, it is very capital intensive. When you look at that industry as somewhere you want to play as an entrepreneur, you need to have deep pockets, and there's just no beating around that bush, right? So we can just use that as a segue into the conversation, right? It has grown over the years, and definitely there are opportunities. Now, you want to come in to telco sector, I don't think anybody will give you any advice to come in and try and take any of the well-established MNOs. But there are, I mean, if you look at the value chain or the ecosystem, there are a lot of layers where people can play. Not less capital intensive, really, but you look hard, you look deep, you find opportunities. So, I mean, you may not come in as a tower co, fiber co, maybe you're looking at the ICT provider space. And the people do a lot of things there where you're partnering with somebody that has infrastructure already to probably run fiber to some estate or enclave that you have a good relationship with, and you can make some decent amount from this kind of investment. Other than that, you're probably looking at well-established, lots of players from the get-go, but yet everyday opportunities. I still imagine being a trade partner, reseller of some of the vouchers or services, right? Even selling devices can be quite lucrative, if you find a good space to play in there. But other than that, it's not all bad news, right? It will interest our listeners to know that there is actually a draft policy on localization. And now this ties directly to the theme of this program, in an inflationary environment. You find out that nobody is immune. Even the businesses you think are doing quite well, everybody's trying to localize costs. There's a lot of costs, and FX liquidity is an issue. There's a lot of costs in foreign currency. And I mean, we're no strangers to that conversation. Everybody tracking the drama around the devaluation of the naira recently. And so every business is trying to, localize expenses that are, based in foreign currency. And that, I believe, is one very big area where it's going to throw a lot of doors of opportunity open, because in any scenario, in any way you can approach a telco, any player in that industry, to say, look, I can offer you this service or this product in naira, and you're telling them you can do it, and you actually can do it, and they're seeing that it's going to cost them less than they currently spend. Equal quality, equal utility from whatever it is you're providing there. That's value automatically, and I think we're happy to listen to you. So I'll just talk a little bit about that policy. Like I said, it's a draft one. It was drafted by the National Ministry of Communication and Digital Economy. And it's just basically 4 pillars. It talks about manufacturing, people, software and services, and then R&D. When you look at the people, it's pretty much just talking about, how many people are employed, and those kind of things. So that's not an employment opportunity. And I wouldn't want us to go too much into R&D, but we can focus on the manufacturing bit and the services and software. I think those are very good opportunity areas. Now, when you look at those two for manufacturing, we can look at it in terms of devices and equipment. You know, we all use mobile devices. But if we look at in terms of the operations for telcos, and I mean, anybody in that space, whether it's a major operator or someone else like an ICT provider, they all use some common devices like routers and dongles and etc. Now, I mean, we may not have all the capacity, but I believe if you borrow from some other industries like power, when I was there, I mean, we have in the local players who manufacture as it were, but really, even if it's just assembling, you are, remember what I said earlier, you're providing value, you're going to offer products in local currency, and that's automatic value. You can, I mean, there's always going to be a dollar component there, but at least you're reducing it because you're going to locally and manufacture the enclosures and those kind of things, and then assemble the circuit boards and some of the other things that you have to import. So that I think that's an area. It's not going to be cheap, I'll be honest, but it's still an area where people can explore. Related to that is equipment, same thing. External enclosures for network cabinets. Some of this equipment that are out there on the sites. For those of you that have seen some of these sites up close, those things have to be imported wholesale. Some of those cabinets and enclosures can be manufactured locally, and by doing that, you're creating value, like I said, and I'm sure the players in the industry will be happy to listen to you. I mean, you don't even need to be, I don't personally think, you need to even do it in conjunction with an OEM. As long as you can prove to the guys here on ground that, look, this thing is going to be compatible with your, with whoever you're using, just ask them to put their software on it. Then, I mean, I think there's an interesting proposition on the table. And then talking about services and software services, really around maintenance, a lot of maintenance contracts, and you find out that operators and players enter into these contracts with what you call them, OEMs, right? But these guys hire local guys to provide that service. But of course, they're still billing in FX. So if you can get certified, as a service, to provide all those service and maintenance activities, then definitely, they'll be happy to listen to you and enter into an agreement with you. I think I've been talking for a bit fast. So I just want to pause to see if there are any questions, and then we'll talk about the software a bit. So just check for me, see if there are any comments or questions so far, or
okay,
I'll just go to.
Yeah, okay, I think you can go on. I don't have questions yet, but once they come in, I'll let you finish, and then I would ask everything at once. Is that okay?
Yes, fantastic. Thank you very much. So lastly, software. I think that's a very big area. I mean, we Tolulope, I think, mentioned, or you did mention fintech. I mean, we've seen that in the recent times, the developers, the software developers and coders locally are doing big things and competing well on a global stage. And I don't think that should go to waste, even when it comes to a sector like telco, right? There's a lot of software that are used today in the IT and network aspect of that industry that can be localized, right? There's opportunity for local players to step up and say, look, we can do this, and you're gonna get the same quality and service out of it. And there are a few examples. You can look up a company called Synfix and CWG. I mean, they're already doing big things, but I can assure you that they're still ample opportunity. I mean, I forgot to mention this earlier when I was just doing like a small rundown of the policy. I mean, Alton, which is the Association of Local Licensed Telco Operators, did some estimation while we were having the preliminary engagement on this policy, and they estimated that annually it's about $2.1 billion that flows out of that sector, as payment. So just look at it. I mean, any small value you can capture there, will be beneficial. And I think I have it somewhere here. I'll just take a quick peek at it. If you look at the software component, it's also quite huge, right? Just give me a second, I'm bringing it up, so I'm not going to share the screen, don't worry. I just wanted to give you, an estimation. So the point is, right, it's something that, there's a huge opportunity there, right, in terms of being able to capture. So I have about, 800 million. That's from out and for management fees, network and software about 250 million. These are all in dollars. So, managed services about 157 million. So capex, which speaks to the equipment, about 700. So, I'm just saying that's a huge opportunity. I mean, nobody expects that entire amount will be captured immediately, but as government support and initiatives are being rolled out, anybody who is keen on capturing some of that value can, I think, definitely take advantage. So I think for me, that's pretty much the rundown in terms of how to view the opportunities in the telco sector as it is currently. And happy to take questions and provide a few insights as we go along. Thank you for me.
Okay, thank you so much for that quick recap, Kay. So I already have a question for you. You talked about the opportunities that exist in the value chain. And the first question on my mind is, what sort of capex are we looking at? So the 4 pillars exist now, beautiful. There was a lot of focus on manufacturing. I know the people, I was also going to ask questions about, so the people, what kind of training or expertise are required now that might be lacking in there? Because I could as well just say that I want to start some sort of small school where I train labor force and push them as pipeline into the telco. So, but let's just look at the value chain and say the opportunities there. Which one can the average guy consider doing? Which one can you partner with, say an HNI and get done, in your own opinion?
So I'm sure to look at speak a bit more to this. Yeah, you can always put together some funding, right? And it's not everything that is. It's big money, right? But it's, like I said, it's a you have a kind of like a graduation scale. So it's not that when you want to for comparison, right? So you want to roll out a full telco network. We're talking about billions of dollars, right? You want to do tower co, very expensive. You want to do fiber, millions of dollars. So I'm just saying it's gradual. None is that small. So all the way down to, like I said, assemblage, fabrication, and those things. It's not cheap, but I don't think it's also numbers that are quite scary, right? So it's something I think that a positive business case can be put together as long as you identify the areas, right? And when you look at the people you want to serve, I don't think that they're not looking to sign small contracts. The contracts are going to run into huge numbers as well. So I think at the end of the day, if you can just demonstrate value and capacity and say, look, we can do this, somebody at least will be willing to listen to you, maybe even do a POC before committing, but definitely there's an opportunity. You talked about training. That's a very interesting and important aspect. The only challenge there is that I think, I'd mentioned software. Look, you need to get trained, right? But I think it's something you acquire that capacity or capability on your own, and then you come and sell the value. So I think that's the onus is on who wants to do the business. But in terms of also the knowledge transfer that needs to happen internally to reduce that, foreign FX exposure, I think most of it will come from the knowledge exchange directly with the OEMs. To be honest, I'm not sure any third party can come and say, hey, I want to make sure your staff can run this software or this equipment on their own. It has to be the OEM that does that. So they unfortunately might still capture some of the value there. But for things that you don't really need anything from them. Even the services, you can acquire the skill. You just want to tell them, look, I want to be your local partner here, because they're also aware that everybody's looking, it's becoming increasingly difficult to enforce or push those your contracts that are in dollars. So you can probably have delayed invoice and all those things. So they'll be happy to work with a local partner who can do the job, can get the payments, and then give them some royalty or whatever else it is that you agree with them. So I don't know if I answered your question as well for me.
Okay, no, you did. And I was going to go back to Tolu because she said I should go back to him. So Tolu, I have a fantastic idea. I have a POC already. How do I get started? At least with your experience with SMEs, I'm sure you already have good insight into how to get started.
Yes, thanks. I mean, once you have your proof of concept sorted and you're confident in the scale of the opportunity, what's important is that you put together documents that helps you convince other people of the scope of the opportunity. I think, people, SMEs generally live in this bubble of, the idea is fantastic. I'm sure it's fantastic. They see the value pool, right? And we all see the value pool, right? It's just that we all know that operating any value pool takes some kind of skill set, takes some kind of effort. You have to think through it. So developing bankable business plans and financial models that gives you, so if somebody gives you 5 minutes, you put the business plan and the financial model in front of somebody, of an investor, you can convince them and say, this is the money, this is how I make money, right? And so I guess that's although, and it's surprisingly enough, from what we've seen, people don't have, a lot of SMEs don't have that discipline. They have, they know that we can make money, let's just go and make money, but if you don't put all of these things down, you won't have a total picture. Not like you can never have the total picture. When you get into field, typically you face some challenges, but at least the risks that are manageable, you would have identified them, you would have put in place mitigants, and then when other risks show up, then you decide, okay, these are how I navigate it. When pilots fly, you have to use it with an analogy of a pilot. When pilots fly, they don't know at times that there will be turbulence in some places, right? But they don't fly blind. They fly with their eyes open, with a full map of, okay, this is how we navigate it. When we take off, we go this way, we go this way, we go this way. When they get to a certain place and then there's turbulence, then they navigate it. It's exactly with pursuing these kind of opportunities. Draw up your flight map. When you face challenges, you navigate. But flying blind, I think, is what you don't want to do. So that's first one. And then from there, you could take that business plan to different category of investors. There are investors who would fund early stage businesses. Just show them their concepts. There are grants that they will just give to you. Even if for the proof of concept, there are grants that people give to you that, okay, you want to prove a concept, take these funds, use it to prove it. Just show us your progress, right? Then there are, of course, more commercial funding, the venture capital, the private equity guys who expect you to make money and deliver returns. And then there is, the bank loans, where banks will look at, how will I collect my interest? Is the interest, banks want to make money, so they will want to, once you show them that there's money, they will play. The difficulty is when you yourself, you don't know how you will make money. And how do you convince somebody to put their own money and depositors' money down to help you make money? So I think that's some sort of that process that you take to from ideation and from proof of concept to actually bringing the business out live. Thank you.
So just to pull it further in, so I've done the ideation, I've done the business plan. I need to, of course, build some sort of list of investors that I have to go after. Based on your industry knowledge, I know there are a few agencies, governments, parastatals that I can actually even start with because they have the opportunities available to the masses. Do you want to just mention a few that are the popular ones that one can just consider to go to? And then I'll come to K. So once you're done, I'm going to go to K. Yeah.
Okay. We do know today that central bank has all of these intervention funds. Just sitting down in somewhere in some banks, right? The Bank of Industry has fantastic packages that I'm aware of, that I know very well. I know that even NEPC, Nigeria Export Pro. So some of these things are sector-based, right? So NEPC, I'm very sure, gave grants recently to to some category of, do you understand? So it depends on what you want to do, how you want to approach it. But CBN, NEPC, BOI, who else? So there are other institutions. I think I can't recall now, but if I do recall, I would probably just drop them in the chat box. But yes, there are government agencies that help you to raise.
Yeah, that's cool. Thank you. So if you remember any, just drop, especially private sector too. I think that'll be good. It's okay.
Yes, thank you for me. Thank you very much, Tolu. And it's just to buttress Tolu's points. Some of the conversations that you also hear alongside, this policy that I mentioned are things around, free trade zones, right? And it's just to add that there is a lot of support you can get. So if you're talking to, you talked about, you've done a POC, if you're talking to a partner in China, for example, and, to say, look, guys, let's bring this manufacturing here. This is one of the things you can use to sweeten the deal, because we all know what comes with free trade zones. A lot of incentives, tax incentives, getting access to that land for free, infrastructure. And then again, part of the way to look at it too is, even looking beyond the Nigerian, telco market. If you go into these things, you can go into it with a mind that whatever you're doing is to also establish it as some kind of regional, hub for providing those services. So you're not looking at just the Nigerian or those equipment or devices. You're not just looking at the Nigerian market, but you're looking at the whole West African region. I think just to bring that up, that perspective as well can make it look less daunting, when you think about, I want to play in this space. I just wanted to add that. Thank you very much.
Thank you, Kay. Thank you so much for that. Now, Tolu, back to that, your sector analysis, and back to something interesting that came from the first review around inflation rates vis-a-vis some of the asset classes is real estate. And Bayo, I want you to speak to this, because if I look at the fact that 10 years, 20 years back, because that's what Tolu's data showed, I'm not gaining so much value, not so much. It looked like real estate wasn't the worst of them all, I'm not getting so much value. But asset ownership in terms of real estate is still something the average Nigerian, not just the average person, no matter where you are, you believe in home ownership, you believe in land ownership, because of course, population growth it remains the fundamental need for the industries and for individuals. But then I have to have an approach to it. And I just want you to start from that angle. How should I therefore approach real estate? So Bayo, over to you.
Thank you, Fumi. Despite the inflation in the economy of the country, I can probably tell you that the real estate is still a very good industry to invest in. Despite the inflation and despite the economic meltdown that we are facing right now, the real estate is one of the top areas when it comes to investment, and it has really contributed to the economy of this financial economy of this country. It has become prevalent in a quite long time ago now, that it is a sector whereby you can easily put your money and get a good return. Yeah, there are so many ways to play in this real estate sector, because there are different types of investment that you can go into. I can say, let me just say, if you look at the residential real estate right now, the inflation it might look as if the inflation is not really affecting the residential real estate, but it is. It might look as if maybe the inflation it is really affecting it, and the time to show it might take some time. For now, let me just say the cost of building material is very high now. So most of the developer are the one bearing this cost. Now I can probably tell you, but that played back based on what you're taking to invest into real estate. Probably maybe a property you can buy for like 20 million naira in the last 7 months. Now you can't get it at that price again, meaning that you have to step up your capital base to come in if you want to play in the residential real estate. the developer, the investors are really not finding it easy as it is right now because of the inflation and the cost of building materials, construction, machine and everything has really gone up. So it's actually affecting the residential real estate. But if you look at the commercial real estate, there are a lot of opportunity in commercial real estate. If you look at the hospitality, and you look at also the for office development, to me is not really a good one right now. But if you look at hospitality, hotel, and also if you look at shopping mall, but to me, shopping mall has really the security problem we had in the last few, let me say last year, has really dropped the interest of foreign investors in commercial shopping complex. A lot of people don't really have that trust, that confidence in investing in that area. But there's still so much opportunity to take into commercial real estate when it comes to office development. Hotel and Airbnb and some other aspects of real estate within the commercial real estate is still very viable. And it is a sector whereby you can invest in. If you look at the economy of real estate is more of a service economy. Let me just put it that way. And this is, if the Nigerian GDP is still 50% to Nigerian GDP, because real estate play more within the service economy of the nation. So if you look at land investment, which is another type of investment you can do in real estate, I can say that within this inflationary period, it's a good way to invest. It's really a good way to invest. But you know, for you to buy into that aspect of real estate investment, you need to know, you need to get a knowledge. How do you buy into that? And that is why your due diligence have to come in, because that's an area that the risk is very high, very high to invest in land investment, because this is something you have to go and buy in a underdeveloped area and wait. You hold it for some time, you wait. So for this economy right now, at this inflation period, it is still a very good way to play in real estate sector. The industrial real estate is very viable too. Let me just put it that way. It's very viable right now. There's so much opportunity in industrial real estate as it is right now. So I would say, if you look at it 10 years ago, or what, like the question you asked me, I would say real estate, you can't go wrong with real estate investment. You can't go wrong with real estate investment at any point in time, because the demand is always there. But the cost of entry, the investment portfolio might be very high as it is right now, because the cost of building materials has really gone up if you are looking at the residential real estate. So it is a very good, a viable industry to still put your money in right now, to invest.
Yeah, so Bio, as much as I hear you that it's viable, it's nice. So I think of the fact that, say, for example, I'm not residing in Nigeria, and we know Lagos is the economic hub for the country. And so real estate seems to be the big deal here. So the question I'll ask you is, how can I mitigate my risk? I want to come to Lagos. I still want to do this real estate deal. I think it's nice. I want to probably even build an estate. How do I get started? How do I protect myself? You know, there's Omonile saga going on.
I get it.
It's strongly unregulated. Omonile is also the government's, you know, grassroots is strategic in winning any zone here. So there's a lot of I don't know how to put it, but there's a lot of uncertainties playing out there, and I still want to invest. That's the truth. So how do you go about that? How do you?
Let me say there are a lot. Most of the real estate industry in Nigeria is being really pushed today by the people in the diaspora. If I may tell you, the people in the diaspora are the one really pushing this market as it is right now. The buying power of a typical Nigerian is very poor right now, based on the inflation, and the inflation has really hit on the basic need of any woman in Nigeria right now. So the buying power is very poor to a typical Nigerian, but people in the diaspora have an edge to invest back home here because of the exchange rates. And if you look at the exchange rate and you felt that there's a lot of them that they cannot even invest in, let's say you are in the UK now, you can't invest. There's a limit to how you can invest because of some taxes or some arrangement you have to go through before you invest in real estate in developer. But here in Nigeria, when the sector is not really regulated, I can probably tell you, if you look at the money market, the exchange rates, and you come in here to invest, all you just need to do is to be able to identify an area. Why do you want to buy? Why do you want to invest back home here? Is it for you to be an homeowner, for a possession sake, or for you to make a quick return, a good return? Which return you need to look at it based on the risk factor too. If you want a very high return, that means how do you maximize the risk? So as an investor from a diaspora, you need to look at the risk factor also. Why do you want, before you can exchange your dollar to naira to buy in it? So also to buy in a way whereby you won't run into hormonal issue or government issue, because this is a sector that is not really regulated. So you need to identify the sector, the area of real estate you want to put your money in. You need to identify that before even thinking of investing in Nigeria. But that you can invest directly, and you can invest indirectly. Indirectly can happen to a real estate investment trust or real estate investment group. There are a lot of real estate investment group now running by an independent individual real estate company. There are individuals who run a real estate investment group too. So you can invest indirectly through that. Either real estate investment trust or real estate investment group, there are a lot of people, a lot of organizations, companies running real estate agency, real estate investment through bringing people together to invest, to co-own a property. There are a lot of that right now in the country. And you can also invest into a lot of real estate platforms out there. There are a lot of real estate platforms out there where you can invest also too. But I would say that if you need to be able to identify, because most of these real estate platforms, real estate group, most of them it's a sector that is not regulated. So you need to be very careful to identify which company, which individual you have to deal with. So when you want to invest directly, you need to just be able to identify a lot of real estate company. There's a way there's a proof of concept. You want to buy into residential real estate. There are a lot of off-plan deals going on out there, which is a very good way to enter real estate investment. Off-plan deals, whereby at the point of entry to the site, you key into it, you get it in a very good price, but by the time you wait, before the development is done, maybe there's a timeline, is like 18 months, you're already making money. But how do you do that? You can't just go online there and just identify any real estate company that is doing any real estate development and just key into it. Had real estate investment in Nigeria and real estate from diaspora mostly have one person or the other that is their relatives that connect them to a company or an individual before they can buy into any development. That's for residential. If you're looking at land, you have to be even very careful in that way. And that's an area that has a very entry level. With a 1 million naira, I have an estate in Ecuador right now that we're selling for like 1 million naira. So you can easily key into that, whereby it's very, very easy to pay within maybe say 6-month payment plan. So if you are buying into land, you need to be very careful. But if you are buying into commercial property, and there are a lot of companies who are already listed under the Nigerian Stock Exchange, whereby you can get a due diligence before you can do that. So it is a viable industry to staple your money at this inflation time, but you just need to be very careful, wary of a lot of karma out there. Let me think if I may use the word. There are a lot of companies who are just out there to to take advantage of people in diaspora because they are not here, and they are the most victim in real estate investment in Nigeria. People down here, they have the opportunity to come and do a physical viewing before purchasing, but there are a lot of people in diaspora who are buying into a lot of deals back home here that is not really well detailed. And after many years, they find out that the investment is bad. That's mostly in landed investments, but in residential real estate, it's still minimal, but the entry capital is very high there, because for you to buy a residential real estate that can give you a good return within a space of 10 years, you should be thinking of 20 million naira upward. That is very high, but a lot of ways you can do it. If you don't want to do it directly, you can do it indirectly by investing through a real estate investment trust or real estate investment group.
Okay, that's interesting. So, Barry, I have a follow-up question here. So, just speak to us. How can an investor really protect themselves in this real estate space? You spoke about off-plan deals. Off-plan deals also take a while to materialize, really. You can bring out your off-plan pitch where you're selling and marketing and tell people, oh, in 18 months, this is what it is. Something goes wrong, 18 months, we're still looking up to the heavens. 36 months, we're still trusting God. And 72 months, because like you rightly said, you can start the off-plan deal at price X. Inflation hits. The money you guys have collected is not sufficient to actually develop. That's the truth. And those are the realities on ground that people need to be mindful of. But beyond all of that, the core of the question is, how can an investor still protect themselves in the real estate space? What exactly must I do to protect myself?
Thank you, Fumi. I will suggest that if you wanted to invest into real estate development that is through a off-plan deals, like I said earlier on, that the developer are the one bearing the cost right now, because if you really want to stand for your integrity level, you have to deliver based on integrity level. But there are a lot of them that you will not be able to deliver. And that's why in the next few months now, let me say, there are going to be a lot of court cases surrounding developers within the commercial hub in Lagos State today, as it is today, because it's a two-way thing. Whether you are delivering based on integrity purpose. Oh, I can't judge, because there is no way you go back to a subscriber to tell the subscriber that the price has changed. There's no way to do that. If you do that, it will cause a lot of damage to your brand as a whole. But okay, now how do you now mitigate this level of inflation? Because it is already glaring at us right now. The cost of building material is very, very high. If you start a project today, I can probably tell you, okay, let me just say it's for now, for the past few months now, it's still stable. It looks that the industry is immune to what is happening. But January till June, I can probably tell you it's very crazy. It's roller coaster when it comes to the cost of building material. It's going on very high. And there is a lot of, my company, we actually run into a loss early this year, because we take a construction job for a particular amount of money. And by the time we are to delivery, I can probably tell you the iron rod, the cement has really gone up. So that actually affected. Okay, what do? We have to bear by just because of the integrity aspect. To just say, okay, we want to stand by what we actually agree with the subscriber. But I can probably tell you, it is for a subscriber to mitigate your loss right now is to be able to do a background check on any developer promising you of any off-plan deals for either for 12 months or 18 months. Which majorly you see 18 months. I've seen 3 years payment plan, which I'm not so much. For me, I don't really advise people for that. But I do advise if you wanted to buy into an off-plan deals, why not do the one with you can get access to the Nigerian, there is this fund available for in Nigeria now, in other the federal government mortgage scheme, whereby you can pay that a single digit of 6% to get your loan. If you can get that to buy into a property, is better than you to subscribe to a deal of 18 months or 20 or 33 years right now, because it's either you should be expecting that things can change based on the inflation in the economy. Things can change. The developer can come back to you and tell you that, okay, this product I'm selling for you at so price cannot go at this price again. You have to. So you should be aware of the inflation rates in the country, which is affecting development right now. So if you want to invest in the residential real estate, you should be aware of that. So you should have that in the back of your mind before you even come to invest in real estate in Nigeria, as it is now, if it is residential real estate. But for land, I can probably tell you that's the area where you can play and you can beat inflation with that. Let me just say that. In Nigeria, we can beat it.
Okay, thank you so much. Thank you, Bayo. Thank you for that. And so I just want to quickly go back to some questions that we have. And my recap of what you said, real estate is still good, but you approach it carefully and thoughtfully. You have to know what exactly you're doing and why you're choosing that asset class. So to just quickly wrap up your segment, I want you to just speak to, I know Lagos is a tricky place, but we have the rest of the country to look at. In your own opinion, based on your experience so far in the industry, what other states do you think, I would say sane, is a bit more sane when you're looking at real estate as a form of investment? So let's wrap up.
Okay, when you look at Lagos as a commercial hub in the country, this is a very viable state to invest in real estate. Lagos it is, but the risk involved is very, very high. So you need to take it up. But if you not look at any other state, I would suggest if you look at Abuja as let me just say the capital, the center of power, like in the country, Abuja is viable, but there is overpriced. There's some location that is overpriced. It's just a developing area. And if you look at the southwest, beside the commercial hub, which is Lagos, I would suggest that there are some neighboring city to Lagos that is very viable due to the accessibility to Lagos. If you look at, if you want to do like a commercial real estate now, I can probably say that there are a lot of opportunity along the Ijebu, Ogun State houses for commercial purpose. If you are going to construct a park, let's say like a park, like a trailer park now, there are a lot of foreign investors who are also looking into that in Nigeria right now. And where is the best location? If you are looking at warehousing park, trailer park, and some other things along the Ijebu to Epe to Lagos is a very viable location, and a lot of foreign investors and local investors are taking advantage of that. So I would say Ogun State when it comes to Southwest, but I will look at Abuja as a city, as a center of power, that there is a lot of viable area there. There are some area that are already overpriced, just like we have it in Lagos, where there's an area that is overpriced that if you are an investor, I won't advise you to start in that area because the price is already at the stage whereby if you're not coming in very big, you can't play in that area and you can't easily get a good return because there are a lot of empty houses around the area and empty office. Let me just put it that way. So it's not a viable one to invest in office development in some area now and also real estate. Thank you. So Ogun State, Abuja, very viable.
Okay, beautiful. Thank you so much for that.
Thank you.
So as we begin to wrap up, just because I know usually sometimes we have participants who might later have questions that pop up or we say something on the call and they just want to ask for more insight. So I would ask you, Tolu, Bayo, and Kay, to please just drop either your social media handles or email some means that anyone joining us could later reach you to engage a bit more. Is that fine? So just drop it in the chat room for everyone to see. That'll be good. Tolu, I have a question already, and it's slightly outside the conversation today, but is one that I think you might be able to speak to. So let me just read that out to you. The question is, what does the panel think about the opportunities in the transport and logistics sector, looking at the e-ride, hailing, delivery bikes, and so on as portfolio investment for beginners? So I take that to be looking at startups that are playing in transportation and logistics. Is that something I should consider? Anyone on this call should also look at? And if yes, what exactly should investors be looking at there? So Tolu and Kyle, if you also want to speak to it, I think that'll be good, just based on your, I know you've seen a lot of, even just looking at your experience with mobile money agency and how that has also grown. There might be some major takeaway from that to the ride hailing services that are now growing. So Tolu, please, could you speak to that?
Okay, thank you very much. I'll talk from top down, right? So from a macro and an industry perspective, it's a fantastic sector to be in, right? Because what you see now is, technology, e-commerce requires quite a bit of transport and logistics, to support that business model. And so it makes a lot of sense to be in transport and logistics, right? E-ride, like the person said it, hailing, e-ride, hailing, delivery bikes, etc. Now, to take a closer look at that sector, right? The question is that how do you get into, where do you play? Historically, so there are two segments that I think are interesting in the sector. One is the marketplace. So these are the guys that own the technology platform. So you think about Uber itself. You understand? Think about Bolt itself. Think about Kobo 360 in Nigeria, right? These are companies that have a platform where if I own a truck, or if you look at what's their name now, OPay, all these guys, they are marketplaces that bring owners of assets, of trucks, of bikes, of vehicles together with the customers that need them. And what they just do is that they collect a percentage or a fee or a commission, right? They don't have to own any assets, right? That's one segment of the market. This other segment of the market is that you can own the infrastructure yourself. In fact, you can buy just 20 bikes, right? And then, you decide to either give it to one of these platforms, or you operate it yourself, or you start the danger is in when you want to be a marketplace and infrastructure owner. A lot of times, the hard work that you need to make, it's backbreaking work, right? It's backbreaking work in that you're managing people. One of the biggest risks in this country, in any type of investment actually in this country, Bio has touched on it, is the people risk. The fact that you tell somebody that you bought 10 bikes, okay, you want to deliver. Customers are calling you left, right, and center. You get a driver to drive the bike, and the guy just shows up in Ibadan with the bike. And your business is in Lagos. The people risk is, we don't talk about it enough. It's that you want to do real estate business, you say, okay, this person will, and then you carry money and you give to a business, and the guy just disappears, and your money is your money in thin there, right? So the people risk is significant when you want to manage the infrastructure by yourself. So what I would advise is that, look for a platform, a verified platform, right, that manages all those risks. And I think that's what Bayo is talking about in real estate as well. The temptation to want to do it by yourself, when it's not your day-to-day, it's not your core, right? It's extremely difficult to try to do. You are not a domain expert in a sector and you want to invest in that sector. So that you leave every other thing you are doing and you attempt to learn, make mistakes, learn, and become a domain expert, or you just outsource it to somebody who has spent the first 5 or 10 years to the way we say it in investments, to chop cane. to choke it, to lose money, to make mistakes and all of that. So, if you are leveraging somebody like that, I'm sure that buyer has chopped cane with the losses he's made this year. Next year, if somebody is giving money to him to invest in real estate, he understands the mistakes not to make. You understand? So these sectors in themselves, they are attractive. You should play in them. They are, the returns are massive. But if you want to play directly, you want to take on the risk by yourself, be ready to, it's a G.E.O. That's why private equity people call it a G.E.O. You're ready to first lose money in the first few years while learning, and then make money, make crazy money in maybe after 3 years, right? But, don't combine being a marketplace and being the owner of an infrastructure, and you are not the old guy running the business, and it's not your day-to-day you're doing this. It's a very difficult way to invest. So I think that's what, but the key word is that verified platforms, people that have been vetted, trusted, they're registered with regulatory authorities. You see them out there, it's not just, and when somebody says I'm 21-year-old and I have 10 years investing experience, that, and then when they promise you, one of the key things is also that when you tell people to describe to you, how will you make money? It's still the same question about when people cannot describe how they will make money. They'll say, don't worry, we've been making money in the last 5. It is not you've been making money. How will you make the money? So when you collect the bike, you will look for customers. Okay, why would you look for customers? Or you will do A, B, C, and D. But when somebody just says that I'll be giving you 20% in 3 months, every 3 months, I'm giving you 20%, I'll just tell the person, go and take a bank loan. That 20% you want to give me in 3 months, I'm sure you will give it to the bank in 1 year, right? So convince the bank. When you convince the bank, you can keep all the money to yourself. Just pay the bank 20% once instead of paying it to me every month. Pay to the bank once, and then you become a billionaire. So if you ask some of these questions, you realize that opportunities are bound, but how do you play? You have to be very careful. I think that would be my point about that.
Thank you so much for that, Tolu. So, Kay, I wanted you to also share some insights on this.
Okay, thank you. I was actually eager to go. So, fantastic insights, Tolu. And as usual, I'll just pick up from where you left off and just try and highlight 2 things. Fortunately, I have a personal relationship with one of the popular ride, one of the foremost actually innovators in that, ride hailing when it comes to motorbikes, right? And I just used the example of what happened there, as a cautionary tale, right? As usual, when you have an unregulated environment, today it's one of the most unregulated where I live, sometimes I just see this delivery guy come and go, and it's always parked at somebody's house, and I just feel maybe they own that bike, and just it just runs the one-man show. So really, if you have money, you buy a bike, you get a good brand, rider, you would make some money, right? But the first challenge is, regulation, just one regulation, and that whole business model can be turned into head, regulation around their movements or having to pay some huge license fee or amount. So, just what to keep in mind. And like Tolu said, what's your risk appetite, so are you the kind of person that, hey, well, yeah, regulation has to come out here, let's try and make as much as we can before we go ahead. Then yeah, give it a shot. It's like Tolu said, it's a good area. I think there's a lot of money to be made. I've personally ordered a couple of items from Jumia. I don't know if I can see their name here in the last couple of weeks, and I can see that machine, in terms of the people have gotten a lot of experience, like Tolu said, in getting this logistics and delivery thing working, and if you plug in there too, you can make money. The second challenge though is, okay, I'll talk about 3 things. The second is the people, and Tolu touched on it, just like when Uber first came out, everybody that had some spare change for the car, tried to get a driver, and people said, this thing is good, let's buy more than 1, let's buy 2, let's buy 3, let's buy 4. What they never accounted for was it thought getting a good driver is as easy as buying a new car. And most of them learned the hard way, right? So you start the disparity, and it kind of related to my third point. What kind of returns do you want as an investment? If you get into it, just know already, right? Except you want to do some very, very hard work that, you're probably just going to have one or two bags and dispatch riders, and whatever that brings in, you should be ready to be happy with it. Otherwise, it's just going to be a nightmare trying to manage people. And today, and the tire will change hub and spoke, will change this, and that's all the profit you're hoping to make. So I just wanted to add that in. Thank you very much for me.
Okay, so while I still have you, I want you to speak a bit to mobile, because the mobile banking agency network is growing, and I've met people mention things like, oh, that means I, as a business owner, I can actually just employ like 3 or 4 people, put them in different locations, and this is what they're really doing. And I want you to just speak a bit to the infrastructure behind that and how one should approach a mobile banking agency in terms of a business venture.
Thank you very much for me. And I really appreciate this question. I'm sure some people listening would have probably left here if I didn't say anything about Momo. Like, this guy doesn't know anything. So thanks for bringing it. Because it's one of the developing areas, emerging areas of opportunity, in the telco space. And if you look at the contribution of Momo, mobile money, to the books, if you look at an MTN, even Airtel Africa, if you look at their annual report, it's huge amounts, like really, really huge amounts. So it definitely is an emerging area of opportunity. And of course, the agent network is what really keeps it going. That's the heart and soul of that, of that business. So, and of course, looking at how it started, Safaricom in Kenya and all that, it's kind of like really struck a chord with us here in Africa, and the way we approach, financial services, do those little transfers, having to send money to your relatives, in rural areas and all that. So it's a really good area to look into. Another thing to call out too, we just talked about a lot of unregulated environment. I think that's one of the areas that is actually quite regulated. The truth is, if you look around, another very growing business, I think, any corner you look at now, there's some POS service operator, those guys that are like your informal ATMs. You give them your card, they deduct the fee, they give you the cash and all that. That space is actually not well regulated. It's part of that whole Momo type network. But you see, if you plug into the telco structure, because they have licenses from the central bank, and it's on the back of that deploying these networks. So in terms of the risk, it's kind of low risk. It's risk that some policy will significantly disrupt what you're doing, except, it's a very big about face from the CBN. Otherwise, you're in a safe space in terms of the infrastructure that powers it, and the entire ecosystem you're engaging with. The banks obviously are not particularly excited. It's competing with the services they provide to us, right? And that's what makes it more interesting. Some telcos already have their PSB licenses, which I think is also a game changer in that entire ecosystem. So specifically to your question, yes, if you can find a location, I think the telco I work for particularly is very keen on onboarding, more agents to make sure that that network is very wide and has a very huge coverage. So if you can find a location where there's not an existing agent and, you can get signed up, why not? And of course, like you said, being the person to finance the operation and employ people, not a bad idea. But don't forget, same example that I just gave, same example right here. You have to do your calculation well in terms of people, the people that are going to manage. There's lower risk here of people cutting away your money, I don't know how to put it, or not delivering as agreed. It's just whether you can keep them happy enough to go there every day and put in the work, knowing that they're going to remit to you as opposed to it being theirs. I think the challenge most of the time is people engage in that level of the economy. They really are keen on ownership for themselves, so that the efforts they put in, they feel like they're earning the money for themselves. when they have to remit is where, people get a bit disgruntled. And so here you might just have a lot of high turnover. I think your money is safe mostly, but other than that, I think it's a space people should actually look into. I mean, if you're looking at telco, that emerging fintech convergence that is happening in telco is a very good space to listen and to look into. And if you can find a way to plug in there, it will be great. Thank you for me.
Thank you so much, Kayode. Thank you. That was very insightful. Thank you, Tolu, for sharing your thoughts. And thank you so much, Bayo, for helping us to just better understand the real estate. And I think also for most, you've emphasized an important risk factor, which is the people. And so the most important thing to always check will be the people. A big thank you to everyone that joined us today. We've had a fantastic 80 minutes, and now I want the panelists to let's get this discussion over with so everyone can continue with their day. So I'll go first. Bayo, just your final words, punchy line, the main points you want everyone to take away. And from you, I move to Kay, I move to Tulu, and we'll call it a beautiful day.
Okay. Like we just said, there's so many benefits of investing in real estate in Nigeria. There's numerous of opportunity in real estate in Nigeria. But you need to identify, what do you want? Is it capital appreciation? Is it rental income, which is for passive income? And also, how do you want to play? There are so many ways you can play that. Property flipping. You can become an real estate agency. You can invest directly, indirectly with real estate investment trust. You can join a real estate investment group. You can do Airbnb, property hacking. There are lots of ways. Wholesaling in real estate. It's something you can learn, and you can also invest. We, as a company, we do more of investment in rental income property and development for capital appreciation. So I always advise that you need to know, why do you want to invest back in Nigeria? Why do you want to buy? Why? Those are the first questions you need to ask yourself before you can even decide on any investment opportunity. Here in Nigeria, know why you are buying and for what purpose. Thank you very much.
Thank you so much, Bayo. So I like that. Yeah. You have to be clear on to why you are investing in real estate. And I think that might also apply to almost any asset class. Why are you investing in this? When do you also need your returns? And for what future spend are you connecting that investment to? Kay, let's hear your final thoughts as we wrap up.
Thank you very much for me. I mean, it's been a very wonderful session. And while I was thinking about, putting my notes together, as I had something came to my mind, and that's what I will share as I go now. To invest, I mean, we all know what's going on in the country. So to invest in Nigeria, I think now you have to either be, a very big optimist, or just ignorant of, the macro macro indices, But also, and I hope that's what we've succeeded in doing today on this call, if you know the industries or subsectors where they're doing quite well, and where you can't go wrong, where investors are happy to make cash available, then yeah, those are the places you should be looking at. And I think you survive this inflationary period until things stabilize. So those are my parting words, and I hope you guys all have a great weekend. Thank you for me, and thanks everyone.
Thank you so much, Kay. Tolu, final words from you.
Okay, thank you very much for me. Thank you, Kay and Bayo. It's been interesting. And what I will talk about, we just talk on the two other sectors. I think what we've learned on this call is that is a framework for thinking about investing. One is that don't keep your money in the bank account thinking that you're saving. Do something a little more active about the significant chunk of the funds you're not spending. If you expect the money to be worth almost the same thing or even much more, when you need to spend it 3-5 years down the line. That's the first thing. And when you're investing, right, think about your environment. Think about the country where where you operate, right? So you invest in sectors where the growth that you see is attractive, right? And don't take a top-down look at it. You have to look critically into sectors. So We've said that, oh, real estate may not be doing well, but we know that some sectors of real estate are doing fantastically well. Industrial, like Fire said. Another sector that I think people don't talk about quite often is the farmland, right? You buy farmland itself, and then you lease it out. You buy farmland, you develop it a little, and then you lease it out. It's low risk, potentially high returns, right? So, but if you play into other sectors of agri, it may be a little more difficult and not challenging, right? I'll also touch on, we also talked on technology, right? The technology sector cyclically is growing, right? If you find a space within that sector where you can capture some of that growth, right? And MTN made life a little easy for us. I'm not recommending this stock, take note, but look at this stock clearly. We buy data. This call is run on data, right? So look at that kind of money that goes to all these telcos on a daily basis, right? So you have to look closely at those sectors that are participating in the economic growth numbers that the statistical bureau is pushing out. So I wish you all the best in your investing journey, but most importantly, don't let them take your milk away. That's the last word I'm saying. Thank you.
Thank you so much. Thank you, Tolu. So don't let them steal your jar of milk. Hold on to it very well.
Thank you.
Yeah, thank you. That was brilliant. Thank you so much. I've had a fantastic time with you, Kay, Tolu, and Bayo. I think this was very, very insightful. So to our participants, Tolu, Kay, and Bayo already dropped their contact details. Just in the event that you have more questions or a thought comes to mind, please feel free. You want to discuss the data Tolu shared. That's is a CFA guy. So I'm sure we'll be very happy to get on an entire weekend conversation just talking about NBS data. We'll be excited about that. Kay is a strategist at heart. So if you want to discuss the opportunities he mentioned, he could speak a bit more into things you should look at and how you could look at your structure. And Bayo is a full-time real estate person who looks at the risk and tries his best to help people balance everything out. And finally, if you have general questions, you can reach out to Ecofina. Philip just dropped the email address. It does a lot of investment advisory driven mainly by research and a bit of PE, which we call private equity too. So we can all consider that. I'll say a big thank you to the panelists. This was a beautiful conversation, a good way to spend our Saturday. And thank you to everyone joining us across the globe. It was a wonderful time with you guys. So let's call it a beautiful day, and watch out for the next episode, which usually we'll send out via our newsletters, and expect a replay link so you can go back to YouTube and play it in case you missed it or you want to share a part of this discussion with anyone. Thank you, everyone. Please have a wonderful day. And so from me, Fumi Okubanjo, I say bye.
Bye, Fumi. Thank you very much.
Okay.
Bye, bye.
Bye, Fumi. Bye, everyone.
Bye.
Thank you, Fumi. Thank you, everyone. Thank you, Tolu.
Thank you.
Okay.